Hey guys, welcome back to the channel. Today's video, we're going to be breaking down 15 hacks to improve your FICO score. So when it comes to the FICO score, it is the determining factor in the rate that you are going to pay for any money you borrow. When it comes to a mortgage, when it comes to an auto loan, unsecured debt, even credit card debt, the FICO score is the determining factor on how much and where your rate is going to be determined. So let's break down these hacks and figure out how you can improve your own FICO score. Number one, paying your bills on time. Now, when you pay your bills on time, 35% of your FICO score is based on this, which means it is the biggest part of the FICO score. Now, you want to make sure that you are not more than 30 days late. After 30 days late, that is when most creditors or lenders will report your late payment. Now, one thing to remember, guys, is one single late payment can almost knock 100 points off your credit score, which is kind of crazy. Now, the more that you're late, if it's 30 days, 60 days, 90 days, the worse of an impact it is going to have on your credit score. Number two, requesting a credit limit increase. Now, this might come as a kind of shock to some people, but credit utilization is 30% of your score, meaning the amount you have available in relationship to the amount that you owe. So if you have a credit card with a $10,000 limit, you have $2,000 on there, you are using a 20% utilization of that credit card. If you go ahead and raise that to a $20,000 limit on that card, of course, your factor, your amount borrowed on that card goes to only 10%. Now, credit card companies want to see utilization about 20% or less. The big thing with this, guys, is the closer that you're getting to your maximum limit, the credit card companies say that you are living outside of your means or supplementing your income with credit card debt, which is the reason why this will bring your score down very, very fast. This plays right into our third one, which is paying down the balances, guys. As you carry balances on your credit cards, it gets more expensive. Not only does the monthly payment go up, but also you're messing with the capacity that you have on the cards, making sure usually the balances are reported every 30 days, that you are paying down as much credit card debt as you can as fast as possible for really two factors. One, improving your credit score, and two, not carrying as much debt. That way you're not paying as much interest. Number four, transferring your balance. Now, a lot of people do this over and over and over. Possibly getting 0% for 12 months, 18 months. However, having access to more available credit can also boost your FICO score for that same exact reason of the credit utilization factor. Now, avoiding closing your credit card accounts is number five, because again, based on the last recommendation, if you're closing out older cards, you are really doing two things to your credit, guys. Number one, you're limiting the capacity of the credit. And also the second one is you could be wiping out a lot of credit history if you've had that credit card for an extended amount of time. Try keeping the old account open if there's no annual fee, anything of that nature. Now, there will come a point where most credit card companies, after a year or two of inactivity, will go ahead and close out that line in its entirety for you. Now, number six, avoid opening new lines of credit. Now, of course, 10% of your score is based on the new lines of credit or searching and acquiring for new credit. This is really makes a big difference when it comes to the length of credit. So it does take time to repair your credit, to rebuild your credit, even to build it in the first place. They take the age of accounts into consideration, as well as hard credit checks. So the hard inquiries do make a big difference on your score. If you have well-established credit, it might be 15 or 20 points. If you're very new to credit or have damaged credit, it could affect your score a little bit more. Now, kind of counterintuitive to this one, number seven is opening a new line of credit. Now, this is really if you're new to credit, limited credit, if you don't have payment history, if you don't have credit cards, you want to make sure that you open up new lines of credit. This will begin growing your length of credit, also your payment history, also looking at the capacity. Best way to really grow your credit score, guys, when you open up a new card, you really look for two different things. Number one is, did you make a purchase? Number two, did you make a payment? Those are the two biggest things that we look for when it comes to a credit card. And of course, the third one is the capacity. How much do you have actually borrowed on that card? Now, when it comes to utilization, guys, again, 20 to 30% is really the sweet spot. Once you start going again above that utilization, it is going to negatively impact your credit score, which is the reason why you do want to make sure that you're using very minimal on the credit card in relationship to how much you have available. And number nine talks about the Experian Boost. This is a free tool. Now, users average about 8 to 12 points, which again again is really not a big difference. It links your banking account to software, verifying what accounts you add. You can also go ahead and add some utility bills, which can kind of build up a payment history, but I know they don't have that much impact when it comes to your actual FICO score. So opening a line and paying it down or paying it off makes a big difference on building that credit. Number 10 is fixing credit report errors. This is probably one of the most common things that we see. There are on occasion either bills that were reported incorrectly, reported for the wrong individual, medical collections. Most of the time there are things on the credit report that you did not know were on the credit report. That is where annualcreditreport.com comes in. You can get one free copy of each bureau. That is right, guys. There are 3 of them for free every single year. Now, this does not yield your credit score. However, it does give you access to the full report to ensure that everything on there is in good standings, and you know that everything that is reporting to your credit report is yours in its entirety. Now, number 11 gets into requesting goodwill deletions from the creditors. Now, the creditor that puts something on your credit report has the ability to alter late pays, stop payments, missed payments, things of that nature. Most of them will not do it, but there is a very slim chance that some of the creditors will alter their credit report, so you have a much better reporting and a much better FICO score. Now, number 12, this is really riding on the coattails of someone else, being an authorized user on someone else's account. When you look at a younger generation or even someone with damage or looking to rebuild credit, you can go on as an authorized user. Now, you are not responsible for the debt. However, it will improve your credit score. So the credit account in good standing, doesn't have a high balance, makes all the payments on time. Being an authorized user on someone's card can again improve your FICO score dramatically, especially if you are new to credit. Number 13, opening a credit builder account. Credit unions as well as some banks have kind of a starter account or a credit builder account. We start off personally in my financial institution with a $500 credit line that is about open to anyone based on the repayment history and where your credit score is. It can actually increase up from there, which is nice because again, if you're new to borrowing or if you're looking to establish credit, you can go ahead and build that. There are also loans where you can do secured loans. So what this is you can set aside, let's say $1,000. You can say, okay, I'm going to borrow against my own money to build a repayment history on that $1,000 that I had. So over the next 12 months, I'll pay my own $1,000 back essentially, but you still get 12 months of payment history. Number 14 goes to prioritizing student loan debt. You have to make sure, guys, that you are paying the student loans, even if it is just the minimum. If it's not deferred, if you're required to make the payment, once they come out of deferment, you have to make sure that you're making the payments because they are coming due. And the final one we look at, guys, is waiting it out. Now, this is kind of incredible to see. Hard inquiry stays on your report for 2 years. That is right. If there is a delinquency, it is on there for 7 years. That is right, guys. 7 years, your delinquent payment will stay on there. Defaulted account, 7 years. Foreclosure, 7 years. Bankruptcy, and when it is discharged, 7 to 10 years on your credit report, guys. So I hope one of these 15 really did spark some interest or helps to really know some of the hacks to improve your FICO score. So guys, let me know in the comments what you guys think, and also what was your favorite hack out of this list of 15. And as always, thank you guys for watching.